Okay, Jeff, great to see you. So for everyone watching here, thanks for watching this video with Jeff Weber. My name is Brett Hofstadt. I'm a business partner of Jeff, but also a happy client and student of his investing method. And we were reflecting on all the changes and improvements he's made to AIM investing, originally developed by Robert Lichello over the years. And we want to talk about those things now. So Jeff, you've been investing with AIM for many years. You can tell us about your background a bit, and
Sure.
then tell us what's one of the things that you've done to improve AIM based on what
Right.
Robert Lichello started with.
Hello to all the nice people who have tuned in to see my YouTube video. I think you will find this very useful and helpful. I am Jeff Weber. I learned about AIM from Robert Lichello back in the early 1980s. He's written a wonderful book explaining his AIM method. I've read that book numerous times. And as I read the book, I'm always trying to improve on something. So I came up with some of my own ideas that I think improve Robert Lichello's AIM and makes it even more profitable for investors who want to follow the AIM method. The first idea I came up with was different than Mr. Lichello's. Mr. Lichello basically said, have 10 investments, which I agree with, but his idea was once a month you would check the total and see if you had to buy or sell, and then you would just arbitrarily pick one of the 10 and make a buy or sell on that one. Well, my idea was to have individual spreadsheets for each one of the 10 investments, so you would always know if you had to buy or sell on that particular investment. Then my second idea was on how to pick what investments work the best. Mr. Lichello really did not spend any time explaining what type of stocks or other investments to use. Well, in the early part of my thinking, I was using different forms of stocks, and they were getting good but not great results. Then luckily, I went to a financial seminar and learned about long-term options or LEAPs, and I found out they were the perfect investing vehicles for AIM. A LEAP is just an option that expires the third Friday in January. So right now I have my clients using January 19, 2024 LEAPs. Soon the 2025 LEAPs will come out in the middle of September. And then later on, a month or two after that, I will have my investors roll over to the 25s.
And Jeff, how about briefly, can you tell everyone, if you want to invest in a company using AIM, what's the advantages of investing in the LEAPs for that company versus the stock?
The advantage of investing in the LEAP are twofold. First of all, the average LEAP is only about 25% the cost of the stock. So if you were going to invest in, say, Apple, the stock might be $150 a share, but the LEAP would only be maybe $35 a share. So you can own a lot more of the LEAPs than you can shares of the stock with the same amount of money. And second, a LEAP is about 5 or 6 times as volatile as the stock. So using LEAPs with AIM, you will make 5 or 6 times the amount of profit you would make owning the stock. A good example, in my newsletter, I have a Dogs of the Dow LEAPs portfolio and the Dogs of the Dow stock portfolio, so you can compare the difference. Well, after 7 years, the Dogs of the Dow stocks portfolio is up about 105%, or more than 10% a year, which most investors would be happy with. But the same Dogs of the Dow LEAPs portfolio is up about 800% in the same period of time. So you can see why leaps are the better investment when the risk level is the same.
Okay, thanks. All right, great. Let's talk about what's another improvement you've made to AIM.
Okay, another improvement is Mr. Lichello never addressed the fact that the stock market has different phases, bull markets and bear markets. So what I quickly found out, because AIM basically starts off with 50% cash and 50% stock or leaps, is if you don't come up with a bear buy strategy, you quickly will run out of cash way too soon. So normally I set up a regular bear buy is normally 25, 30% less than the stock. So let's imagine a stock is $10. Okay. So your first buy might be $7.50. Okay. Well, when you have a severe bear market like we do right now, the regular bear buy strategy of 25, 30% will quickly wipe out your cash. So I came up with what I call the bear buy strategy. So, and it works like this. If you made the first buy at $7.50, maybe you made the second buy at $6, we'll say. Okay, now your cash has gone down. Well, your third buy is going to be a bear buy. So with a bear buy, you only use 1/3 of your remaining cash, and you make the buy at 50% lower. So if you'd made your second buy at $6, your first bear buy would be $3 with 1/3 of your remaining cash. Now, the market we've had lately has been really severe. So I came up with what I call the super bear buy strategy, which means if you made the buy at $6 and we're going to make your next buy a super bear buy, you would say, well, $6 and then $3, but you'd make it even lower, like $2.50. So you would get more bang for your buck, as I would say, on your remaining cash. So if you made that buy as a super bear buy at $2.50, well, your next buy would also be a bear buy, super bear buy. So you would say, I made this buy at $2.50, half of that is $1.25. I would make your second super bear buy at $1, so that you're getting the maximum use. And then once you have a sell, we go back to the regular bear buy strategy until we start having more buys in a row, and then we consider maybe another bear buy or super bear buy.
Okay, thanks. And this is something I've used in my portfolios lately with the market, but you've been a great help, and I encourage people just to get in touch with you directly, personally, so you can walk them through what to do. So you're a great teacher for that.
Okay, and then the last improvement I want to talk about is, and I think this is very useful, is Mr. Lichello did not use a strategy of figuring out what your next buy or sell would be. When I'm helping clients, I figure out after what their next buy or sell will be. I place it down at the bottom of their spreadsheet and tell them to put in a limit buy or sell so that they can never miss the future buy or sell. The beauty of limit orders is if you put in a limit buy at, say, $2, the worst that can happen is you get a buy at $2. But if the market continues like it has been, very negative or downward, well, you might get that next buy at $1.75 or $1.60. So you're actually buying at even a better price than you hope to get. And the same with sells. If you put in a sell at $7, you might get it at $7.25 or $7.50. And the broker does not charge any additional money for it. And this way you can never miss a buy or sell, which is the secret to AIM, is to make all buys and sells that AIM tells you to.
Yeah, and this really, I'm surprised Lichello didn't do this, but this to me is the huge beauty of AIM is it makes it automatic. you put in
Right.
your limit orders ahead of
And
time.
with AIM, you always know how many you should be buying or selling and at what price you should be buying or selling. So it takes emotion out of investing and makes it logical.
Logical and predictable, because now I set my limit orders. I don't have to worry if I
No,
ever have
and
a
you can
trade.
never miss them. The broker's computer is going to take care of you.
Yeah, I don't need to worry about the prices each day and check them. I just
Yeah.
know my orders
I
in.
mean, the only thing I encourage people is check every day to see if you had to buy or sell. Takes about 5 minutes. And then if you're working with me, tell me what your buy or sell was. I'll update your spreadsheet. You'll see your next buy and sell at the bottom, and you put those in that night so you're ready to go before the market opens the next day.
Right. Well, what I do, Jeff, is I set up an alert so I know if there's a trade that happens. I get a message.
Very good. Yeah. Set up an alert with your broker so you know, because you
And
don't ever want to miss them. All the time, I have people who suddenly tell me about a buy or sell a week ago or 2 weeks ago or a month ago, and it makes a lot of extra work for me, and they're missing out on profits.
right. Okay, Jeff. Well, this is great. It's fantastic what you've done to improve AIM. So tell everyone how can they get in touch with you, and
It's very easy to get in touch with me, and I have several social media accounts you can join. My Twitter account is at JJJ Investing. I'd love to have more people follow me. I put in a lot of investing tips there. Brett and I's website that he is largely responsible for, because I'm a tech dummy in the long run. He's the tech smarty. We have a beautiful website with tons of information, other YouTube videos like this one, blog articles, books I have written that I offer for sale. So go to my website, which is also jjjinvesting.com, and you can easily sign up to get a copy of my free first book, and you'll get a free sample of 3 of my newsletters, and you'll get a ton of free bonus materials. So it's a great introduction to AIM investing. And again, you'll find from my materials, I freely give out my phone number. And if you ever have a question about AIM, give me a call. I'd love to talk with you.
Okay. Well, thanks, Jeff. Yeah, you've been a fantastic teacher for me in my investing. I'm
Well, thank you.
grateful we met and been able to work with each other. And all right, well, I'll put a link to all those resources, your website, in the description of the video. So I encourage people to look in the video description for that. And thanks a lot, Jeff. And
You're very welcome. Okay.